What's going on, everyone? Welcome back to James the Bullion. I'm James, and today we're talking about something that a lot of people's minds right now, especially with the way the economy is, and that is what happens to gold when the economy tanks. If you've been watching the news, you know things are uncertain: tariffs, inflation, interest rates, geopolitical tensions. The word recession keeps popping up, and every time it does, people ask me the same question: should I buy gold? So in this video, I'm going to look at what gold actually has done in the past recessions, why it behaves the way it does, whether silver does the same thing, and what I'm personally doing with my stack right now. So let's get into it. Obviously, I'm not a financial advisor. This is just my own personal opinion, but let's get into it anyway. So why is gold called a safe haven? So gold has been called a safe haven asset for centuries, but what does that actually mean? A safe haven is an investment that holds or increases its value during periods of economic uncertainty. When stock markets crash, when currencies weaken, when governments make decisions that shake confidence, money flows into safe havens, and gold is the original safe haven. The reason is simple: gold isn't tied to any government, any company, or any financial system. It can't be printed. It can't be inflated away. It's been valued by every civilization in human history. When people lose trust in paper assets, they turn to something real, something tangible, and gold is the most universally recognized real asset in the world. But here's the thing: safe haven doesn't mean guaranteed. Gold doesn't always go up in a recession. The relationship is more nuanced than that. So let's look at some of the actual data itself, okay? So 2008 financial crisis, the big one, when Lehman Brothers, or Lehman Brothers, depending if you're this side of the pond or not, collapsed and the global financial system nearly came apart. Gold actually initially dropped in the panic. Everything got sold, stocks, gold, silver, everything. Investors needed cash and they needed liquidity as quickly as they possibly could, right? But gold recovered faster than almost any other asset. By 2011, gold had roughly doubled from its pre-crisis levels. While stock markets were still trying to claw back their losses, gold was hitting all-time highs. Similar pattern during the COVID crash in 2020. Gold dipped briefly in March 2020 when the pandemic triggered a global sell-off. Then it surged. By August 2020, gold broke through $2,000 an ounce for the first time in its history. Again, the initial panic caused a dip, but once the dust settled, gold was where people put their money, while everything else was falling apart. Let's go back even further for those of you who are older than, say, 40. So the dot-com burst in 2001. So when the dot-com bubble burst in 2000 and the US entered recession in 2001, gold was already near 20-year lows at that point. But from 2001 onwards, gold began a decade-long bull run that took it from around $270 an ounce to over $1,900 an ounce. The recession was the starting gun. The pattern across all these is consistency. Gold might dip initially during the panic phases of crises, but when everything gets sold for cash, but it recovers quickly and then outperforms most other assets during the recovery phase and beyond. The reason? In a recession, central banks typically cut interest rates and print more money. We've talked about this previously. Both of these things weaken the currency, and when the currency weakens, gold priced in that currency goes up. So now let's talk about silver. So silver is a little bit of a different story because about 50% of silver demand comes from industry. Silver tends to get hit harder in a recession. Industrial demand drops, factories slow down, and the silver price falls with them. In 2008, for example, silver dropped over 50% from peak to trough. Gold dropped about 25%, so that's quite a big difference, right, in how much pain you're sitting through. However, and this is really important, right, when the recovery kicks in, silver tends to actually outperform gold on the upside. From the 2008 low to the 2011 high, silver went roughly up 5 times, right? Gold roughly doubled. So silver punishes you harder in the crash, but rewards you more in the recovery. If you're the kind of person who can stomach volatility and hold through the pain, silver in a recession can be an incredibly good buying opportunity. If you need stability and sleep at night, gold is safer. So what does this mean for stackers today? Well, what does it mean for us right now, I should say? If a recession hits, what should you do? Again, I'm not a financial advisor. This is just my own personal opinion. But the first thing is, don't panic. If you're holding physical gold and silver, you are already better positioned than most people. You own a real asset that has survived every recession in history. That's the whole point of stacking, right? Second, if gold dips in the initial panic, that's a buying opportunity, not a reason to sell. History says gold recovers. If you sell at the bottom, you lock in a loss and miss the recovery. Third, keep stacking consistently. Pound cost average, which we've covered previously. Buying a fixed amount at regular intervals is the best strategy for uncertain times. You buy some when the price is high, some when it's low, and over time it averages out, costs smooths out together. No need to time anything. Fourth, don't overextend. A lot of people do this. Only spend what you can afford to lock away for a long term. Bullion is not a savings account. If you need emergency cash, you don't want to be forced to sell your gold at the worst possible moments. So what am I doing with my stack? Well, here's what I personally am doing right now. I'm continuing to buy gold sovereigns and Britannias in these little 1/10ths, same as I always do. I'm not trying to time the market. I'm not panic buying. I'm just showing up consistently. I'm watching silver closely. And if we do see a recession and silver drops significantly, I'll increase my silver buying as well. That's when the best deals happen. I also look at the gold-silver ratio all the time to see which one's more expensive and which one's worth buying. And I'm keeping cash available. Not all in on metal. I want the ability to buy more if prices drop, and I want an emergency fund that doesn't require me to sell my stack. That's it. No magic formula. Just consistency, patience, and a long-term view. Gold has survived every recession in human history. Just remember that. It's been a store of value for thousands of years, and whatever happens next in the economy, physical gold and silver will still be here when the dust settles. Hopefully this video's helped some people. You're thinking about your strategy. Hit like and subscribe if it has. Drop a comment telling me what you're doing right now. Are you buying? Are you holding? Are you waiting? For live gold and silver prices, please go to thebullionsafe.com. Link is in the description. I'm James. This is James the Bullion, and I'll see you next week. Happy stacking, everybody.